Now, hear me out, right? I think Forex charts are so easy to read and understand when I'm just looking at them like this because you don't have to complicate any single thing when you're just staring at a chart. Once upon a time, I was a beginner trader too, right? And with 4 years experience in the market, looking at the charts day in and day out, I can sit here and still tell you that I am still learning each and every single day. Whether it is a winning trade that I take, whether it's a losing trade that I take, I will make sure to find a lesson from each and every single trade that I ever place in my MetaTrader, right? This is going to be a really interesting video because in this video, I'm going to reveal a little secret that I use not to ever be emotionally attached to any account that I ever trade. Be it a prop firm account, be it a personally funded account, I am never attached to any account, right? But before we get into all of that good stuff, if you're new to the channel, welcome. We trade Nasdaq over here. If you're returning, welcome back. You know what's up. Don't forget to hit the like button, turn your post notifications, and subscribe to the channel. You feel me? Because when we hit 10,000 subscribers, I'm going to be doing a little giveaway, funding 10 different accounts and giving 10 different subscribers free mentorship, right? And you already know that we're going to be picking the most consistent members of this channel to give the giveaway to. So I actually want to know who is watching the video and who is just coming to comment down below. So I'm going to say a little secret word in between the video at any random point, and I want you to comment it down below in the comment section so that I can see that you actually just watched the whole video, right? So let's just start by going back onto our chart right over here. As you already know from the weekly analysis and the previous video that I did drop, we had a really beautiful week, right? CPI was absolutely amazing. I had a setup on US30 and I also had a setup on gold, and obviously you already know that they all bought. Why? Because Nasdaq was already overbought. For US30 we had this little trend line over here and it was broken out of. That is why I simply just took the buying signal. And the other thing I used to make this analysis is I looked at my FX book and I noticed there the majority were actually going for selling positions on Nasdaq, US30 and gold. And obviously when 70% of the traders are actually seeing one thing, it's actually most times going to go into the opposite direction. That's confirmation from my FX book. I had more confidence to just hold my Nasdaq trade and go into this US30 trade that you're seeing running over here, and the gold trade obviously that is also running over here, right? And that is exactly how we ended up killing CPI. It was absolutely beautiful, and once again we are sorting the highs on Nasdaq, right? But we're kind of like expecting a pullback right now because it's kind of overbought, right? And the market never moves like tap water. It has to move, go down a little bit, for a little breather, right? It needs to breathe a little bit and then still continue with the trend if it wants to continue with the trend. But from all the data that we have, we already know that the stock market has just been racing up to the top. The only thing that's not really performing as I would want it to is the Dow Jones, right? US30 has just been acting up, not moving at all. It's also one of those things that a lot of traders actually like to trade the US30 compared to the Nasdaq, right? And the market is mostly manipulated on US30 more than it is on Nasdaq. Right now, as of the time of recording the video, we are currently in a sell on Nasdaq, just for the mere fact that it has to breathe. Our first take profit has been hit, 40 pips. We are still hoping for a little bit of a move. We need like, let's say 100 pips, 150 pips will be decent to close off the week because we've literally had a really beautiful week. We have obliterated the Nasdaq this week. That's I don't even think it wants me to trade it again next week, right? But then as I said at the beginning of the video, right, how not to get attached to your trading account, right? As a beginner trader, I used to get so emotional when it comes to losing, trades, and then when I blow off my $50 account, my $10 account, I would literally cry over blowing off my account. And then I realized this one thing, right? So this was a $500 account, as you can see over here, and it has a profit of almost $10,000. But notice the withdrawal that I have made, right? So the first withdrawal that I made was exactly my $500 that I placed into the account. I took it right out and I stayed trading the money that the market had given me, right? So that is one major thing that you can actually use to not get attached to any account. And every student that I teach, that's one of the things that I start by telling telling them, right? Deposit your $50 into the account. Your goal is to try and double that amount. Take that $50, 50 to 100, and take out the money that you placed into the account, right? So the moment you make that first withdrawal of your initial deposit, right, you are literally not going to get attached to the account at all. And you now start trading the money that the market has given you. Personally, that worked so great for me. So right now, if I even deposit $1,000, $5,000, my goal is to withdraw the exact same amount of money that I placed right in. I take it right out and I start, trading, with no emotions attached, because I already know at the end of the day that this is not my money. So even if I lose it, it's not my money. So after I mastered that, I noticed that no, these days I'm not really getting attached to the market as much after I have withdrawn the amount of money that I have placed in. And the only thing that was now bothering me was the fear of, missing out on my trades. Right now, this is something that you just have to work on as a trader. Let's take a look at gold right over here. So this gold chart, as you can see, it was 9:49 a.m. in the morning when I actually saw this setup right over here. And guess what? I did not take the trade because it was not yet complete. So before I see a complete setup, I am not going to take a trade, right? The best that I could do is to just analyze. As you can see over here, I was analyzing the market, and then did speak about it in the previous video that gold has rejected at a major daily time zone. And obviously you can see it's giving us, higher lows. It's giving us higher lows. We have two higher lows over there, and this already means that we are going to go to the top. The market is failing to push. The sellers are failing to keep pushing the market lower, right? So for that reason, I already knew that I am biased to a buying position on gold today. Now, I made the whole analysis, as you can see over here, with the trend lines and all. I was expecting the market to break out of that trend line and then, push up to the top, because it has to go and complete that other trend line that we have at the top. And then, also have an institutional zone that is right there. So I wanted the market to, come back and first retest, before it breaks out, it retests at this zone and then moves to the top, right? I could have simply just entered the trade, and had a higher stop loss zone in this case, but I didn't do that because I am going to always wait for a perfect setup according to the plan that I have just laid out over here. I want the market to break out. I want it to come back to my point of interest, and then I'm going to wait for a rejection right there, and then I'll start looking for an entry, right? Now, guess what the market did? I was not hoping to miss the trade for 2 times in a row, right? So I'm going to just put my screen running over here so that you can see what happened, right? So at this time, I was not in the studio, and I just opened the chart so I can check out if the gold trade has completed, if it has moved back to my point of interest, and I actually realized that it has pushed up to the top, right? I could have simply just entered the trade again at this particular zone because I already know that I'm biased to a buy, but it is not according to the setup that I had laid down for my own self, and therefore I am not going to take the trade. Look, there are a lot of opportunities that will come in the market, right? So you don't have to bother yourself by that fear of missing out on trades, right? So I did make an analysis. Okay, I'm like, okay, gold still has to go to the top. I started to sit down here. I drew my trend line. I can see that, yes, the market has indeed broken out of this current trend line. And it seems like it's pushing up to the top, right? So in this case, I don't think it's going to go back to the bottom. So what should I do as a trader, right? I was like, okay, let me take off this trend line. We can already see that we don't want to have our chart dirty. Let's take this trend line and put it at the bottom. We already know that the buys have been confirmed by this trend line breaking, right? So we don't need it. It is already broken. And then also you can see that it has broken out of this resistance zone right over here, right? We know that the market, after it breaks out, it always has to come and make a retest, right? So at this point, I already know that we're approaching the New York session, and within the New York session, we're going to see a lot of volatility, right? So I already have this trend line at the bottom. Ooh, the keyword is take profit hit. So write down in the comment section below that take profit hit. I know that you are not skipping parts of the videos, right? So obviously I've seen that the market has broken out of that resistance zone, and now I'm just waiting for it to come back down for a retest, and then comes back to another point of interest. Then that is the only time that I'm actually going to now start thinking of entering the trade, right? And then this has just proven to you guys that opportunities in the market are always going to come. And now what I was saying is I don't want to miss on the trade again. So at the moment of recording this video, as you can see my screen right over here, right? So we have the exact same setup. The New York session is open. We are going to see a lot of volatility in a couple of minutes, right? And you can see that exactly what I was just explaining to you guys. This is a 30-minute candle, and it just formed, right? It's exactly what just happened, right? So if I was not recording this video and just staring at this chart, I could have literally taken my trade right at the zone, because we can see it broke out of this place, right? And then I drew this resistance zone that was broken out and is now a support. The market came right to the support level, sat on it, and then, you know, it's pushing up already to the top, right? So those would have been my two possible entry points, this zone right over here and the next resistance zone at the trend line right over there. But as I can see, the price action would have gone on to maybe a 5-minute time frame. You see, we have a really nice candle right over there. I would have caught the trade at this zone, you know, even at this particular zone, and would have bought for 5, 10, 15, could be sitting in 15 minutes, you know, worth of pips right now on gold. So opportunities in the market are always going to be there. They're always going to be present. So don't ever be, you know, bothered by that fear of missing out on a trade. Now, even when I'm looking at that gold trade and it seems like I'm already late, I'm not going to just start jumping into the trade right over there. After 15 minutes, my setup has already been completed, and you see me now jumping into this trade because I was seeing a buyer. No, this is already a gone trade. I don't have any reason trying to take such a trade because it has already moved. One thing you need to understand in the market is opportunities are always going to be present day in and day out. The only time you cannot find an opportunity in the market is on Saturday and on Sunday when the market is actually closed, right? And now the last thing that I will leave you traders with is the losses part of the game. Now listen, I am speaking from a personal point of view, you know, my own experience, how I deal with these losses, and you know, how you can also try and look at it if you're struggling to deal with losses as a trader, right? So I just look at losses as if it's a normal thing, like it's part of the game. I have understood this thing in trading, that it is not every single trade that I am going to win, and it's absolutely normal. I'm not this market, right? The only thing I can do is to sit down, look at my charts, you know, and see what the market wants me to do and do what it wants me to do, right? And it's very normal for me. If the trade is a losing trade, then you know, yeah, that's a losing day, you know, that's okay. We close off the charts, we go on with our business, we come back tomorrow with a good attitude. We're never attached to our losses, or we're never overexcited for our wins, you know, where we take 5,000 pip. Don't see us going crazy because of that. And even if we take a 5,000 pip loss, oh, that's a lot, but you won't see us crying over that anymore, because we understand that simple fact that to be a good trader, you should normalize to take losses. Losses are part of the game. You cannot run a business without paying for the expenses. You can't go to school and not pay your tuition. You have to pay for all of these things. And in trading, it's still the same thing as a business, right? You are also going to pay these dues that you owe the market, right? So if you just take it from that point of view and then try and normalize the losses that the market gives you, sometimes, not most times, it's not normal to take losses every time, right? So if you normalize taking losses like that, you understand that it's easier for you to just look at the chart and know that there are two outcomes of any trade that you take. It's either going to be a winning trade or it's going to be a losing trade. And if it's a winning trade, well done. If it's a losing trade, well done. We come back tomorrow and we go hard again, right? Now, if you really enjoyed that video, don't forget to hit the like button, turn your post notifications, and subscribe to the channel. You feel me? With that, it's been Tino, and I'm out. Peace.